Hello guys, hope you're all doing good. Yes. So today or now we'll be taking one particular concept, I think, which is creating a little bit of hype in the market. The new conceptual framework. There's a lot of talks going on there that so they brought a new conceptual framework. There is an amendment. It is changing. It is affecting and all that. Blah 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 blah. Okay, so I just like to take up through this and understand what is this and how does it really affect us and everything. Okay. So first of all, if you just see, I've written amendments slash new. Okay, as such, this is we've already done this topic known as conceptual framework for preparation of financial statements. That is already there. Okay. Now, what ICAI has done is they've introduced a new conceptual framework for Ind AS. Okay, so there's not really an amendment because the old thing has been scrapped and they brought in the new conceptual framework. Okay, so what is this conceptual framework? So it's simple. See, if you want to form any Ind AS, let's say you want to form an Ind AS, like we have various Ind AS, no? Ind AS 16 on PPE, Ind AS 38, Intangible Asset, Ind AS 102, share-based payment. Like this, we have many Ind AS, correct? There must be some guidance as to how to prepare that Ind AS, correct? Some structure should be there, correct? Keeping that in mind, the standard should be formed. Yes? So that is your conceptual framework. Conceptual framework is nothing but a guidance, overall guidance, not a specific guidance. Standard will give you a specific, like how to account PPE, Ind AS 16 will talk about, very specific. Yes, but conceptual framework is like a boundary or a general guidance given for those guys who are setting the standards or who are creating this Ind AS, those guys who are making this Ind AS, no, for them, this is a conceptual framework, is overall guidance. Okay. Now, there itself you understand. Are we standard setters? You and me, are we setting this form? Are we setting the Ind AS? No. We are only learning the standards which is already set by the standard setters. Yes. So, our job is to learn them, repeat it, apply them, or remember them and apply it whenever they ask in the examination. Okay. Now you think, is the new conceptual framework, does it have too much of exam relevance for us as a students? Obviously no, because it's a guidance given for those guys who are forming the standard or setting the standards. We are not forming the standards nor setting the standards. So as such, for us, it is not much relevance. Okay, so you don't have to worry about the too much hype going on. This is a very simple topic. Okay, so we have only a few questions we'll run through. That should be more than sufficient. Okay, so in this conceptual framework, what they'll give some guidance, like what is the definition of an asset, what is the definition of liability, definition of equity, income definition, expense definition, like this. How does the financial statements ensure faithful representation? Like this, all these overall aspects they will include in this conceptual framework. All this any which way, asset card, liability definition and all, we've already covered all that. Yes, fine. So that means for our examination or as far as our exam is concerned, this is not really that topic which will have a significant weightage. Okay, fair enough, because this is more important for the standard setters and not for us. Okay, that's the first point. So, but still we will run through and see what and all is there. Okay, one, it is relevant for what I said. This is meant for those guys who are formulating or setting the standards. Okay, second one, this you need to remember. Sir, can conceptual framework override the standard? Meaning, let's say conceptual framework says go left. Just giving you a vague example. We'll also come to a case study where you'll learn this better. Let's say for simple, to just decode it, conceptual framework, let's say, says go left. Ind AS, the individual Ind AS, let's say Ind AS 38. Ind AS 38 is saying go right. Conceptual framework is saying go left. Ind AS is saying go right. Which one should you follow? Because one is saying go left, another one is saying go right. Which one should we follow? We should always follow Ind AS. Conceptual framework cannot override the individual standards. If there is any conflict between conceptual framework and individual Ind AS, in most cases there will not be concept, but in some cases there could be. We will go through in a case study where that will arise. Don't worry about that for now. If at all there is a conflict between conceptual framework and individual Ind AS, then individual Ind AS always trumps, meaning we should only follow individual Ind AS only, because those are more specific standard. Conceptual framework is overview, that's all. Okay, it's an overall guidance. But individual standards dive more into the topic. They are more specific. They consider more issue. Okay, so hence you should always follow the respective Ind AS. So conceptual framework cannot override the standard. Those are the 2-pointer. Now the third question is, sir, why did they bring in this new conceptual framework? Because for us, no, we already FR is like probably one marathon only. It is going on and on and on. Been studying, it is not getting completed only. Yes, no. Okay. Again, one more amendment, new thing they brought in. Why? Sir, the old conceptual framework, now what we had, was very outdated, sir. Okay, it was in fact formed in 1989 ka framework, we were still using it. Okay, same thing, we were, using it. Hence, they thought it's better to revise it. On what IASB did, International Accounting Standard Board, no, in March 2018. March 2018, this is not a new amendment, okay? March 2018, International Accounting Standard Board, IASB. They brought in a new conceptual framework. Now, now the ICI has introduced this. Okay, now we said, okay, when we'll adopt that. Fair enough, because now also India is also following Ind AS, right? Ind AS is more or less in line with the IFRS only, except a few deviations here and there, which we refer to as carve out. Yeah, we have seen it when we have done individual standards. Okay. So the reason for this adoption is because the old one was quite outdated. That's the reason they brought in this. But either ways, we are not standard setters. So that means as far as we are concerned, this is not really much relevant. Okay. So let's run through some questions that they've added in this particular topic. All these questions they've added in the new study material. ICI study material, May 22 edition onwards, they've added these questions, which I've taken. Illustration number is homework. Oh, your first question only homework. Yeah, homework. Because why? Sir, we've already done this. When we did financial instrument topic, no, we've already covered this question. This is not a new question, it's the same thing. If you remember, in financial instrument topic, we did something known as factoring arrangement. If any trade receivable is sold off to a factor, then should we de-recognize that trade receivable or should we still keep it as it is, was one concept. That I had told you, if you remember, you have to check whether the factoring is with recourse or without recourse. Here it is with recourse factoring. This question is on with recourse. Okay, that's the reason you cannot de-recognize the financial asset, that is trade receivable. You still continue to show it. Okay, so whatever amount you have received from the factor, you will show that as a financial liability. Loan, finance arrangement. The money received from the factor will be shown as a financial liability and you will apply Ind AS 109 ka provision. That's what they've called out over here. Okay, this is an Ind AS 109 ka question which they brought in. Okay, if you want, I think I can do it as homework. If you want just 2 minutes, we'll quickly run through also. Natasha Limited is the company. They are having a trade receivable of 280 crores. Natasha has entered into a factoring arrangement with Samantha, okay, a financial institution, according to which it transferred trade receivable in exchange for an immediate payment of 250 crore. Our Natasha Limited has sold our transferred trade receivables to Samantha Limited, and Samantha Limited has given us 250 crore rupees under factoring arrangement. And as per the factoring arrangement, they're saying any shortfall between amount collected and 250 crores will be reimbursed by Natasha Limited. Okay, this only is giveaway. Now, debtors or trade receivable is worth 280 crores. Samantha has put one clause saying what? Now, what will Samantha do? They'll follow up. Yes, no. Now, the factor will follow up and collect the money from the debtors. Yes, from the debtors. Let's say debtors paid only 220 crore rupees. Debtors sold kodala hogo. Right? We'll only give you 220 crore. One debtor told, I don't have money. Paisa nahi hai. Jao. Alright? It all I'll not give. Then what is Samantha telling is, okay. Alright? There is a shortfall, right? Shortfall, Samantha is saying, now, Natasha, you need to pay me. Okay, so that means who has the risk and reward? Natasha only, no? Risk is on their head. Yes. Because if debtors does not pay the full amount, then Natasha has to reimburse Samantha. That means the risk is still with the Natasha itself. That itself is a good enough arrangement that risk and reward is not transferred. So you cannot de-recognize a trade receivable. We have done questions on this. I'm just giving you a quick overview. Just in case you've forgotten, go back to financial instrument wala topic, pick out this concept, read that, then you'll understand that this question is actually homework only. Sir is chuma wasting time by doing it again and again. Okay. All right. Once the trade receivables have been collected, any amount above 250 crore. Okay, now they're saying, or we'll read through this. Less interest on amount will be repaid by Natasha. See, will be repaid to Natasha, I guess. Yeah, will be repaid to Natasha. Now, Samantha Limited has to collect how much? 280 crore. No? The factor is given only 250 crore. Let's say debtor paid Samantha Limited 280 crore. Okay. Now, what Samantha Limited is saying is, okay, I gave you 250 crore, but your debtor paid me 280. So, excess amount, no? Excess amount is 30 crore. That I will pay you. The factor is saying, any excess amount beyond 250 crores if I am collecting, then that excess amount I will give you. Less any interest, because this 250 crore I gave you right now. Your debtor will pay me after 6 months, 1 year or anything. Less I will reduce the time value or time period ka interest cost, how much ever that comes to. I will reduce that, meaning my commission and all I will reduce. And the balance amount I will pay. That means what? Risk and reward. This is a good enough, sentence to conclude that risk and reward is still with Natasha only. So you cannot de-recognize trade receivables. That's what they've given over here. Okay. So trade receivables should continue to appear in the Natasha Limited, and whatever payment that you have received from Samantha, that is factor, should be shown as a financial liability, because this is a pure with recourse wala factoring. Not a new question at all. I just gave it as homework. We discussed everything. Okay. Hope you understood. All right. So let's see what the next question is all about. Illustration number 2. Explain the criteria in the conceptual framework for financial reporting for recognition of an asset. Okay. Discuss whether there are any inconsistencies with the criteria in Ind AS 38 intangible assets. Okay. They're saying compare the asset card definition given in conceptual framework. Compare that with Ind AS 38 intangible asset. Intangible asset, they have defined what is intangible asset. They are saying this asset and intangible asset ka definition you compare and help us understand, is there any inconsistency between that. They're asking us to compare two things, asset and intangible asset, and identify is there any inconsistencies. Okay, let's jot it down. We have anyway written it. We know this. Asset means what? If you remember, I'd given you Virat Kohli example before, or Rohit Sharma, whoever it is, or MS Dhoni, I don't know. When we had done India 16 PP, I'd given you this. Asset means what? Asset means something which is within our control. For you to call something as an asset, okay, that resource or that particular item should be within our control, from which we will get the benefits. And we will restrict others from getting the benefits. So these are the two features of an asset, something which is within our control, from which we will get all the benefits. Okay. All right. This is the definition of an asset that we have learned, and the same thing is given in conceptual framework also. You need not write this. They've given it over here. Asset means controlled by an end. They've given in para. I'm just jotting it down, a quick pointer for your reference. That's it. All right. Now let's call out intangible asset ka definition. What is intangible asset ka definition? It is identifiable. If you remember, intangible asset is identifiable non-monetary asset without physical substance. Yes. Without physical substance, or the value of that physical substance should be immaterial. We had discussed. Okay. These are the definition of intangible asset. And intangible assets has its own recognition criteria, that is FEB and cost measurement. Done. Like this, we had intangible asset. Now they're saying between these two, is there any inconsistencies? Because asset ka definition is only two, control and benefits. Intangible asset is giving so many other definition and recognition criteria. If you remember, for development phase expenditure and all, there was another criteria, TIFRC. Remember? T for technical feasibility, I for intention to complete, A for ability to use, F for future economic benefits, R for financial and other technical resources, C for cost measurement. If all these conditions are satisfied, then the development expenditure could be capitalized, meaning it could be shown as an intangible asset, we are told. Okay. Asset is giving only two definition, something which is within our control, something which is giving benefits. But intangible asset is giving all the so much of extra drama they are giving. So is there any inconsistencies? No, just because intangible asset, meaning IAS or Ind AS 38, is giving you more features, you can't say there is inconsistencies. Because this conceptual framework is just a guidance. They will give you overview. All right. But individual standard is more specific. And moreover, intangible asset has no physical substance. We have written over here. Yes, it has no physical substance. Something which, like a building and all, you can see and you can evaluate. But like intangible assets like brands, software and all this, no, they don't have much physical presence. So you need to be extra careful when you're recognizing them, because otherwise financial statements might be unnecessarily window dressed, or it could be stated, or it could be overstated. Yes, unnecessary, some extra asset could be shown off in books. That is the reason intangible asset is giving more stricter guidelines. If you want to recognize it, comply with it, and then only go for it. Just because intangible asset is giving more specific guidelines or a stricter guidelines, you cannot say that there is an inconsistency between the two. That would be wrong. Okay, that is the conclusion. So what to write, sir? We got confused. If you check study material, no, they've given full and all they've given. So much they've given. See? Simple. How to answer? First point, may you write asset ka definition, which I've called out there, no? Okay. Asset ka definition you write. Second, may you write intangible asset ka definition. Okay. Then you say, Ind AS 38 is more specific. Standards are all more specific, sir. Conceptual framework is mere a guideline. Okay, it's just an overview. But individual standards is more specific. And moreover, intangible asset, IA, has no physical substance. Intangible asset has no physical substance. That means this extra guidelines, what Ind AS 38 recommends, TIFRC and all that definition, is very much important. Those strict guidelines are very much necessary because the nature of the asset is such that it has no physical presence. So you need to be extra careful when you are recognizing them in the books. So that means final conclusion is no inconsistency. Conclusion, no inconsistency. Why no inconsistency? Because conceptual framework is mere overall guidelines. Standards are more, give targets a specific point. Okay, just because standard is saying something extra, you cannot say that is inconsistent. That would be wrong. Okay, so this is how you're going to present it. This will come for maximum maybe 4 marker. That's all. So don't keep on writing all this which they've given in study material. Make some 4 to 5 points and write. That's all. This is easy, Asset ka definition, intangible asset ka definition. Intangible asset is more specific, and intangible asset has, or Ind AS 38 is more specific. Why is it more specific, or why is it more stricter? Because intangible asset ka nature is such that they don't have physical substance. So you need more stricter guidelines. That is the reason you could say conclusion, there is no inconsistency between the two. That's it. Okay, that's what they've given all this over here. If you look at the final guideline, it appears to be consistent is what they're saying. Okay, they've gone through everything. Okay, I've just picked out these 5 points. That's for the examination. That is more than sufficient. All right, just show you just in case you are writing anything. All right, move on. Illustration number 3. Directors of Hind Limited are particular about usefulness of financial statements. Okay, they have opined that although Ind AS implements a fair value model, that is very much wrong. The directors of this company, they are saying Ind AS implements fair value model. Does Ind AS fully implement fair value model? No. Only some components or only few assets are shown at fair value. Yes. Like your biological assets are shown at fair value, less cost to sell, or your financial assets, some could be valued at FVT, PL, FVT, OCI, etc., etc. Not every asset, every liability is shown at fair value. Yes, so Ind AS, some are shown at historical cost, some value provision for DSR and all are shown at present value. Yes, each component are shown at different metrics. One could be shown at historical cost, one could be shown at present value, one could be shown at future value, etc., etc. So that means the opinion that they are giving that Ind AS implements fair value model is not entirely correct. For some components, yes, Ind AS suggests applying fair value. Okay, Let's see what they're saying. This statement looks to be wrong, but still no problem. Let's go further. Ind AS are failing in reflecting the usefulness of financial statements as they do not reflect financial value of entity. What do we mean by financial value of entity? Financial value of entity simply means what? If we were to sell the entity, if we were to sell our business, how much money we going to get? That is nothing but the financial value of an entity. So directors are telling Ind AS does not reflect, or our financial statement which we are preparing using Ind AS, is not giving us financial value. So that's the reason they are not happy with Ind AS. They're telling it is, give me financial value of entity. So it is very bad. What should we tell the director? Hey director, stop that. What nonsense are you speaking? Alright, why? What is the intention of preparing Ind AS? Every company will sell. If you started a company means what is your intention? Your intention is to run the company or your intention is to sell the company. Majority of the entity intention is to carry on the business and earn and fulfill their goals, whatever it could be. Yes. So what is the goal of Ind AS? If you want to point out what is the goal of Ind AS, maybe I'll write it down later on, but just why do we have Ind AS? Ind AS, we prepare financial statement using Ind AS. The main reason of that being the financial statement, if you prepare it using Ind AS, then you can give the information to the users. The financial statements that you prepare, right, will be prepared in a more accurate way so that all the information necessary that you will give it to the users, whoever the user could be, so that he could take whatever decision he wants. That is the main intention of Ind AS. Yes, the financial statement should disclose all the information which are necessary for the users to take their decision. The intention of Ind AS is not to disclose financial value of entity. Financial value of entity means when you sell the entity, what price you're going to get. That is not the intention of an entity. Okay, because like some assets, suppose I have my company, ArivuPro, if you think, we have this mic, computer, iPad and all this stuff. Should I have to show that at fair value, sir? I don't have to show it at fair value. Why? Sir, my intention is to not sell them. Correct? My intention is not to sell them, but to use them and generate the revenue. If I have no intention to sell them, why will I show them at fair value? Why should I break my head in finding out, first of all, its fair value? That I have to appoint a registered valuer. Okay, get its fair value. He will charge me some money. Okay, so why should I do all the drama if my intention is to not sell that asset, but to use that asset? Yes or no? Alright, so intention of Ind AS is not to find out the financial value of entity, but to give the users all the necessary information. Discuss the views of directors regarding the use of fair value in Ind AS and the fact that Ind AS does not reflect financial value of entity, making special reference to conceptual framework. How will you answer? First, you will write what is the intention of Ind AS. Why do we have Ind AS? We have Ind AS so that we provide the information, or meaning financial statement provides all necessary information for the users to take their decisions. The intention of Ind AS is to make sure that financial statements provides all the necessary information so that the users could be existing shareholders, potential shareholders, debtor, bank people, creditor, whoever, all those users, they can take their respective decision. All right. And then you can define what is financial value of an entity. Financial value of an entity means the price you're going to get when you sell the entity. Price on selling the entity. If you want to sell the entity, what price you're going to get? No, that value we call it as financial value of entity. The intention of, third point you can write, intention of Ind AS is not to provide financial value. Is not to provide financial value of entity. The intention of entity is to, or Ind AS is to provide all the necessary information, not to find out the financial value. And if you want, you can add a little more masala. You can also write the definition of fair value. Because fair value is the value that you receive when you sell the asset, or it's amount you need to pay to settle a liability. Yes, all that will come only when you thinking about selling an entity. So you can also write the definition of fair value and accordingly conclude. And you can also write all the assets need not be brought at fair value because majority of the assets, right, we are not planning to sell them. We're planning to use them. Okay, so that's the reason finding out fair value of all the assets and liability and showing them at showing that fair value financial statements will not make much sense, and it is very costly also. Okay, easy to say find out fair value of everything, but it is a humongous task, cost entailing exercise. Okay, so you may not get, you should always balance between cost versus benefit analysis you need to do. Okay, so that point also, if you want, you can write all assets and liability need not be brought to fair value because their intention is to not sell them. That also point, if you want, you can bring it. So these 4-5 points, if you write, you can accordingly conclude. So though Ind AS does not give the financial value of an entity, that is no problem because the intention is not to find out the financial value of entity, but to provide the users with all the necessary information so that they can take the necessary decision. I've just given you a quick 4-5 pointers. Okay, for a detailed discussion, you can just refer this. See, all this point, study material is given. Okay, many points. I've just given a shorter version of it. If you don't like it, you can make 4-5 points using this. That should be good enough because all this question just comes for around 4 marks at the maximum. I don't think so. Beyond that, it will come. Let's see. Okay, if you're copying or anything, I'll just show it once again. Okay, next one, illustration number 4, or 1 minute, hang on. I think there's one more question related to this. Maybe we'll do this one and then come back to that. TYK, as in test your knowledge, question number 1. Okay, referencing, I think you already know by now all these new questions. I've given the same reference as you find in ICI study material, so that you can cross-reference it if you want. Not necessary because our material is more than sufficient. We brought in almost all the questions. If you do this only, that is sufficient, but still just saying. The directors of Giant Limited have received the following email from its majority shareholder. Okay, so this just given the mail extract. Okay, so a subject is about measurement. So they have some issue about measurement. Let's see what problem they have. The shareholders are telling, meaning majority shareholders are telling, I recently read an article published in the financial press about the mixed measurement approach. Yes, what is this mixed measurement approach? Mixed measurement means some components or some assets in our financial statements are shown at historical cost. Some are shown at present value. Some are shown at fair value. Yes, you don't apply all the assets or all the liabilities are not shown using one approach. Okay, you take different metrics. Some, maybe for PP you may use historical cost. Some PP you may use historical cost. Some PP you may use fair value. Some liabilities like provisions for DSR, etc., we may show them at the present value. Yes, possible. All right. Some components we may use fair value like investments, blah blah. Correct. Okay. Excuse me. So this we call it as mixed measurement concept, meaning you're using multiple measurement approach. These are all your measurements that is available. So these multiple measurements are accepted in Ind AS. Ind AS permits that. So our majority shareholder is saying you're using mixed measurement approach, and this is used by a lot of companies. No problem, that is accepted. I hope the Giant Limited does not follow such an approach because mixed seems to imply inconsistent. So our majority shareholder is saying if you follow mixed approach, no, you're not following consistency because for one component you're following one things, no. So there is no consistency between them is what our director or majority, not director, in fact, majority shareholder is pointing out. If you follow different one, that could lead to or that leads to inconsistency. Okay, and I believe that consistency is of paramount importance, and hence I feel it would be better to measure everything in a uniform manner. And majority shareholder saying everything you follow under one approach. Why you're following multiple approach? It will lead to inconsistency. It would be appreciated if you could provide some further information at the next annual general meeting on the measurement basis. covering the approach taken by Giant Limited. How Giant Limited is valuing their assets and liabilities or components in financial statements. The majority shareholder is asking some information about that. Prepare notes to discuss this with reference to conceptual framework. Once, how will you answer? Or first maybe we'll discuss. Sir, first of all, is mixed measurement approach acceptable? Is it acceptable? Very much yes. Why? Sir, you think, what is the main intention of Ind AS? Just now we discussed. The main intention of Ind AS is to make sure that financial statements discloses or provides all the information to the users. So with those information, users can take any decision. That is the main intention. Okay. Now, Ind AS also recommends or Ind AS permits mixed measurement basis. Meaning some components you can go for historical cost, some at present value, some at future value, like this. You can take a call. Why Ind AS suggests that approach? Sir, one shoes, there is a saying that they've called out over here. If you see, one size fits for all approach will not work out. Why it will not work out? You only think, sir. PP, let's say I have a plant and machinery. Okay, or I'm taking ArivuPro Academy only. We have computers. We have our laptops and all. Do we have the intention to sell them? No. Our intention of having them is to use them and generate the revenue. Yes. That means why should I show them at fair value? Is there any necessity for me to show them at fair value? No, I will follow historical cost approach because I have no intention to sell them. Because fair value is that, the price you will receive when you sell an asset. Yes, but I have no intention to sell this PP. That means if I show this PP at fair value, that will not give the accurate information to the users. Yes, because my intention is not to sell them, but to utilize them. Okay. So that means for PP, historical cost approach holds good. Correct. Now think of another asset. Let's say we have biological assets. Assumption. Okay. Let's say I had 10 cows. Okay. I'm a dairy farmer. I have 10 cows. This cows gave birth to 2 calves. Alright. Can I show or can I apply historical cost model to this 2 calves which has been generated due to reproduction? Would it be right to show these 2 calves at historical cost? That would be absolute nonsense because there is no cost that I've incurred. This 2 calves, I got it free. This is just natural process, that is reproduction. Yes. So I cannot apply historical cost for this. I have to go for fair value less cost to sell. Yes. That means now only you tell, is one approach applicable for all the components? No. That will, though it looks like one approach, following one is easy, right? In reality, following one approach for all the components is not accurate. In fact, that will lead to more inconsistency or inaccuracy. Okay, because here there is no cost. Yes, like this. So that's the reason Ind AS permits using mixed measurement approach. Okay, because that will lead to more accurate information. That is one. And second one, finding out the fair value of all the components is not an easy job also. It's a time consuming and a cost entailing process. Okay, if I have no intention to sell them, if I appoint somebody to find out its fair value, that means unnecessary, I'm incurring extra expenditure. I'm not getting any benefit from it, but just the cost is going on increasing. So that way, it will not be helpful. That's the reason these majority shareholder his opinion is saying you follow one approach because that will lead to consistency. In fact, that is wrong. Following the mixed measurement approach only will give you more accurate information because each asset nature characteristics are different. Not only asset, liabilities also. Okay. So that is what we need to call out over here. One size fits for all approach will not work out. So how can you answer? The same. First point you can write intention of Ind AS. We already wrote in the previous question. Same thing you write. Second one, what you can write? Okay, second one here you can write a mixed measurement approach. Mixed measurement approach means you're talking about this, the present value, future value, etc. These are the mixed measurement bases. You can call out one line based on that. We have the following mixed measurement bases like present value, historical cost, fair value, etc. etc. That could be your second point. Third point you could say Ind AS permits mixed measurement approach. Mixed measurement approach. Because that will lead to presentation of financial statements in a more accurate or in a more relevant way. Okay. So you could finally conclude that saying what? You could say now the majority shareholders' opinion is incorrect. The majority shareholder or you can also write one point about what is majority shareholder asking us to do here. In the present case, majority shareholder is the opinion that following one approach will lead to more consistent approach, will lead to consistency. Then write a conclusion saying no, his opinion is wrong. Opinion is incorrect. That's all. That would be the conclusion you can write. Again, if you want more information, you can always refer. They have given a detailed information. I'm just giving you a short, quick 4-5 pointers that is relevant for or that is good enough for examination. Here they have given full. Okay. All right. I think 1 minute. I'll just show you once again. Okay, so we'll just check the next question. I think that is illustration number 4. Everest Limited is a listed company having investment in various subsidiaries. In its annual financial statements for the year ended 31st March 20x2 as well as 31st March 20x3, Everest classified Kanchenjunga, as subsidiary. So Everest Limited is the parent, Kanchenjunga is the subsidiary. Parent subsidiary. Fine. So this parent has classified subsidiary as held for sale. So parent, in their books, they are showing the subsidiary as held for sale. So Ind AS 105 ka provision they are applying. Okay. And present it as a discontinued operation. Okay. So that's what Ind AS 105 talks about that only, non-current assets held for sale and discontinued operation. So they have applied that operation. So whatever profit that they have received from subsidiary, they've shown it as one line item, profit from subsidiary. Because if it is a discontinued operation, you only show 2 components. Profit before tax from discontinued operation, tax expense of discontinued operation. That's good enough. So that's what they have shown currently in their financial statements for both the years. On November 20x1, shareholders had authorized the management to sell all its holding. Okay. So before 31st March 20x2 itself, we had taken approval from the shareholders authorizing that the management can sell off its holding in Kanchenjunga. Okay, within a year. Fair enough. In the year to 31st March 20x2, the management has made a public announcement of its intention to sell. Okay, but did not actively try to sell the subsidiary as it was still operation within Everest Group. Guys, this is the most important sentence. Why? If you remember, when we covered Ind AS 105, if you want to classify a non-current asset as held for sale, if you want to show non-current assets as held for sale, there were certain conditions. In fact, we used to call it as CPMBASW. I don't know how many of you remember that. Yes. So this is just an Ind AS 105 report. C for it should be sellable in present condition. I'll not write it down. I'll just discuss. C for asset should be sellable in the present condition. P for the sale must be highly probable. And when can you say sale is highly probable? When MBASW is satisfied. M for management is committed to sell. Okay. Second one, B for active program to launch the buyer has been initiated. Has that been done over here? You just check. It did not actively try to sell the subsidiary, meaning you're not making an active marketing to find the buyer. I mean, this condition is getting failed over here. In order to classify non-current assets held for sale, all these conditions should be satisfied. All. Only then you can classify NCA as held for sale. Here you're not making active efforts to find the buyer itself. So that is getting failed. A for the price should be actively marketed at a reasonable price. S for the sale to be completed within 1 year from the date of classification. W for the plan not to be withdrawn. Okay. Here this only is not getting satisfied means, can you classify this investment as held for sale? No. You cannot classify it as held for sale because Ind AS 105 Ind AS 105 conditions are not getting fulfilled. Done. So that means what they have done is incorrect. That is not permissible. So this is your first point you'll write in the examination. Other things we'll read the case study and then figure it out. Okay. Certain organizational changes were made by Everest during the year 31st March 20x3. Second year, they did some changes. Fine. Thereby resulting in additional activities being transferred to Kanchenjunga. Okay. We did some structural changes, and because of that, we gave some extra responsibility to Kanchenjunga now. On one hand, you are saying that Kanchenjunga investment you want to sell. Now you are giving additional responsibility to them. Now you tell me, is Kanchenjunga really held for sale, sir? One of the conditions for held for sale is it should be sellable in the present condition. As it is, you should sell. You're like a boss, you are giving additional responsibilities and all that stuff. That means even this one is getting failed. Okay, sellable in present condition is also getting failed over there. Additionally, during the year 31st March 20x3, there had been a draft agreement and some correspondence with investment bankers that showed in principle that Kanchenjunga was still for sale. Yeah, negotiating, that's all. Sir, simple. Just because you are negotiating does not mean you can classify it as held for sale. It should be sellable in present condition. Looks like it is not. Okay, you're just negotiating with the like an investment banker. Active program to find the buyer is still not initiated. So that means still you cannot show this as a non-current asset held for sale. That would be wrong, or that would violate Ind AS 105 provisions. That is one. But they've already done it. So that means we have to conclude that what they've done is wrong. Let's see what they're asking. Discuss whether the classification of Kanchenjunga as held for sale and presenting that as a discontinued operation is appropriate by referring to Conceptual Framework. Okay. Check Conceptual Framework and conclude is what they're saying. First, you call out Ind AS 105. Alright. Then say that as per Ind AS 105, you cannot classify. As per Ind AS 105, it cannot be done. It cannot be classified as held for sale. It cannot be classified as held for sale in both the years, because in both the years one or the other condition is getting fulfilled. For both 31st March, what is the first year? 31st March 20x2 and 31st March 20x3. In both the years, you cannot classify it as held for sale because conditions are not getting fulfilled. Now, Conceptual Framework mein, here there could be certain inconsistencies. Why inconsistency? Sir, Conceptual Framework is an overall guidance. It is prepared with an intention that financial statements are prepared in such a way that users get all the necessary information. Okay. Now you think if you present this as a discontinued operation or held for sale, that will be better for the users. Yes or no? How will it be better? See, simple. When you're presenting as discontinued operation, your P&L will have two parts. I'm not talking about OCI, main P&L itself. You will show all the components for continued operations. For discontinued operation, you will show it as a separate category. Only two components you're going to show: profit before tax, tax expense of discontinued operation. These two components. The moment you show this, the users of financial statement will get to know about one primary information about the cash flows, or about one thing, that this Kanchenjunga, okay, my company is holding with an intention to sell it. So whatever cash flows this parent company is getting, Everest Limited is getting, no, from Kanchenjunga, it will not last long. Okay, it is just temporary. Okay, it will get sold. All right. So that means the shareholder will give a better information. So with this information, he can take the decision better. So as per Conceptual Framework, showing this as discontinued operation is better. Showing Kanchenjunga as DO as in discontinued operation is better, as users will get more accurate information. Because they'll get to know about the cash flows and all that, they'll be able to assess it. Okay. So, but Ind AS 105 does not permit it. So which one do you follow? As per conceptual framework, logically, if you think, classifying it as a discontinued operation or a held for sale is much better because users will get more accurate information in that case. But Ind AS 105 condition is not getting satisfied. So I told you initially when we started, conceptual framework cannot override individual Ind AS. So you have to follow individual Ind AS only. So here there is some inconsistency between conceptual framework and individual Ind AS. But individual Ind AS always wins. It always trumps. So conceptual framework. What is the point I was about to write? Aspects users will get more information. So as per conceptual framework, showing as discontinued operation is a better approach as users will get more accurate information. So there is some inconsistency between, rather I was about to write this. Conceptual framework cannot override Ind AS. So company cannot classify this as NCA held for sale and show it as DO. DO as in discontinued operation. They cannot show it. Okay. So you can also write there is a consistency or there is some inconsistency. There is some inconsistency between conceptual framework and Ind AS. So here I think there is a little inconsistency. That is fine because you still have to follow Ind AS only, because conceptual framework is overall guidelines. Ind AS is more specific. Specific guidelines always wins over the general one. Okay. So those are your quick pointer about this particular case study. Again, detailed way they have called out. I just give you a quick synopsis points. That's it. Done. All right. I'll just quickly see if there's anything extra. If you want, you can write the conclusion. Yeah, you can go through it. I think it's fine. Yeah, I think we have covered all the questions relating to the conceptual framework, this particular topic also. All right. Hope this session was helpful to you. Thank you.